Hello traders, Gary Wagner here. Approximately 2 o'clock in Honolulu, 7 o'clock in New York. It is Tuesday, 19th day of January, and this is the daily report for gold and silver. We had moderate moves in the precious metals markets, but we had a pretty sharp sell-off in Australia Monday morning there. We'll talk about that when we pull up our technical studies. But first, let's take a look at current gold pricing. Traders, although we had moderate gains in both gold and silver futures, it was the low that gravely affected us as it did hit our stops and knock us out at a loss. We're looking at February contract of gold futures, 1839.30. That's up $9.40. The low was 1800. However, we were trading in a different contract month, meaning April. And the April contract month had a low of 1804.47. We had our stops at 1813, so we effectively did exit the trade at that price. We are looking at a daily candlestick chart, this of April gold, and it is clear when we take a look at this that on the single candle, this is today's candle, that it did hit a low of 1804, hitting our stop. That stop was actually hit in Australia as the markets opened up there. And to illustrate that point, we'll go ahead and pull up an intraday chart and then go back to our technical studies. Traders, we are looking at a candlestick chart with each candlestick representing 2 hours in time. You can see this long candle right here on the 17th, and you can also see that the low itself comes in at 1804, which means that the stop was hit Monday morning in Australia, as you can see right here. We are effectively out of our long April gold trade. To do our analysis on gold, we'll go back to the February contract because it is still the most active contract. And what you can see is even with the recovery, and that's this green body right here, the low that was hit puts us technically in a bear market scenario. We have current pricing below the 50, 100, and 200-day moving average. In terms of support, we can say that there is strong support at 1800. We can identify that in two places. The first place, of course, is the low that recently occurred right here. And the second area where we see the market forming a base at this particular level occurred in July. Nonetheless, we have support at 1800. Below that is 1771. That is based upon the 50% retracement at 1771.60. We will have to see how the market reacts over the next day because it would be difficult to be bullish unless we broke back above the 200-day moving average and the 38.2% retracement. It is for that reason that we will maintain a neutral stance on gold futures. Unfortunately, the same thing happened to us on our silver stop. When we look at this daily chart that I have up on the screen, you can see this low coming in at 24. However, traders, because of the fact that these stops were hit overseas and they were hit at a time when the U.S. markets were closed, it did not affect our positions in SLV or GLD. When we look, we are currently at 23.38 in terms of SLV. We entered at 22.95. Our stop is at 21.95, and we in no way came even close to that. We also are trading in SLV above the 50 and 100-day moving averages. Traders, my recommendation is to maintain your long position in SLV. We are looking at a daily chart of Viter Gold Trust, which is currently printing at 172.58. We entered the trade at 172.14. Our stop was at 170.11, so we have definitely not been stopped out of that market. But even in GLD, you can see the distinct difference between that and SLV because here we have tracked below the 200-day, and it is still trading near that particular area. So it is obvious that silver has more potentials for percentage gains than gold as it stands currently. This has been Gary Wagner, wishing you as always good trading. I am sorry I was unable to deliver that to you today in our futures trade, but we will remain long our electronically traded funds. We'll talk to you tomorrow for the next daily update and review. Bye-bye.